to aim for a long-term and successful finance career, taking the Chartered Financial Analyst CFA exam and studying the curriculum is an excellent way to ensure you have a strong knowledge base and top-notch skills. Are you ready to take the bold step to invest in yourself? CFA Society Nigeria is at your disposal, promoting the highest standards of investment practice in Nigeria. As an affiliate of CFA Institute, CFA Society Nigeria seeks to promote the highest standards of investment practice in Nigeria and to provide a vibrant community in which its members and other key players in the investment industry can interact and grow. When you have the CFA Charter, you're globally recognized. Take advantage today by writing the CFA exam and joining us at CFA Society Nigeria. For more information, visit us at cfasocietyn.org. CFA Society Nigeria, making finance a force for good.
Okay, I think we can start. Good morning, everyone. My name is Hydrocarbon Oyedele. I would like to welcome everyone onto today's quarter 3 breakfast knowledge sharing session. Today, we'll be discussing the Petroleum Industry Act of 2021. This is the Petroleum Industry Bill that was signed, that was assented to by the President on August 2021. For most of us, like I was confessing to Mr. Oyedele, that I need more information or more knowledge about this. Most of us have a very vague knowledge. We just know that this bill has been in discussion for over 20 years, and there's been back and forth on an amendments going on about the bill. We also know that the bill was meant to transform or help enhance the producers of the oil, the regions in which the oil was being produced. We know that it's going to transform or reform the petroleum industry in Nigeria. But knowing the details and the exact transformation that's going to happen, I must confess, I don't know, and I know a lot of my colleagues do not know. But we believe as professionals, we need this knowledge to be able to make investment decisions, especially for portfolio managers who need to actually buy commodities as part of their asset classes. So today, we're very, very lucky to have Mr. Taiwo Oyedele in our midst. To talk to us about the Petroleum Industry Bill. He is actually the partner, the fiscal policy partner and Africa tax leader for PwC. So if you permit me, before I hand over to Taiwo, I'd like to read his profile, just to make us really aware of what he has done. So Mr. Taiwo, if you permit me, Mr. Taiwo is a fiscal policy partner and African tax leader at PwC. He is the author of Insights on Taxation and Fiscal Policy, the Top 50 Tax Issues in Nigeria, and the Nigerian Transfer Pricing Chapter of the IBFD publications. He's a contributor to the annual Doing Business report of the World Bank and the Paying Taxes Survey of PwC, covering 119 economies worldwide. He is the he's got a loaded CV. He's a thematic lead for Public Finance and Taxation Policy Commission and the chairman of the Debt Management Roundtable of the Nigerian Economic Summit Group. He's the chairman of the Taxation and Fiscal Policy Faculty Board of the Institute of Chartered Accountants of Nigeria. Is a member of the Taxation Standards Board and a member of the Ministerial Committee on the Implementation of Nigeria's National Tax Policy. He is a member of the Global Tax Forum and a former member of the Global Governing Council of ACC. Taiwo is an alumni of the London School of Economics, Yale University, Harvard Kennedy School and Executive Education. He's a guest speaker is a guest lecturer at the Lagos Business School and is a physician. Thank you very much. I will now hand over to Taiwo. Taiwo, you can now take the session from here. I hope I did a good job trying to introduce you. Like I said, your CV is so loaded that we had to look for a way to summarize it. But thank you, Taiwo.
Thank you. Thank you very much, Ibukun. You did an excellent job. Thank you for the warm and kind introduction. So thank you also to the CFA Society for inviting me. So even though I'm not a member, but I'm a friend of the Institute, so it's a pleasure to be here and to be discussing something that is so important to our country. It affects everyone. I know we have very limited time. I'll try and keep my presentation to about 30, maximum of 40 minutes, so we can have some time for interactions. So it's about understanding the Petroleum Industry Act 2021, with particular focus on implications and implementation imperatives. And the agenda that I have, broadly divided into 3 parts. One is to provide an overview, so everybody has, I'll say sufficient knowledge to have meaningful conversations and then to be able to contribute to this debate that has just started. And then share a bit of stakeholders' perspectives, and then the implementation imperatives and the next steps. So let's start with an overview, and I thought this is a very good way to start. Remember this, analogy of the elephant and the 6 blind men. So if you ask them to go and touch the elephant without telling them it's an elephant, and then you ask them for their feedback, chances are that, someone would think it's a rope, someone would think it's a wall, some would think it's a fan. In fact, some would think it's a snake. They're not lying, they're just not seeing the complete picture. So this is what exactly has been happening with the PIA. So people tend to just pick one aspect and then sometimes they blow it out of proportion. There was a time that you would have thought that the PIA was just all about host community and frontier exploration. So what I would try to do is to do a quick summary, although I would also admit that's a very tall order in the time frame we have. I'll do a quick summary of the main provisions of each of the chapters of the PIA, and then we take it forward from there. So the law is made up of about 5 main chapters. The first one being governance and institutions. Now, the primary objective of this chapter of the law is to ensure good governance and to make sure that we have the right environment and to make sure that government is accountable to the people and also for everything that goes on in the sector. So of course, in the introduction, like Ibukun said, it took us almost 20 years just to get this law passed. And I'll say the major problem for this delay was just politics. Politics got in the way, and then nothing was moving. At a point, you had different versions of the bill at different stages. Even at the National Assembly, the lawmakers didn't even know which versions they were supposed to be discussing. At some point, the bill was sponsored by a private member, which was, to my mind, an aberration. But then fast forward, we're where we are, and now we have a piece of legislation. Now, this new law establishes regulatory authorities for the sector. So again, it was unusual that NNPC, as a major player, was also the regulator in the sector. So that wasn't a proper governance structure. So this law now creates a commission for the upstream sector, and then it creates an authority for the midstream and downstream sector. So by the way, we now have 3 streams. Before, we had only upstream and downstream. But with this new law, we now have upstream, midstream, and downstream. So NNPC, from its current form, would register, NNPC Limited will be registered, and it will be a company that is registered under CAMA, that is profit-focused and commercially driven. So assets, liabilities, and ownership rights of NNPC will be transferred to NNPC Limited. To the extent possible, whatever we cannot transfer to NNPC Limited would remain with NNPC. until such a time that those assets are realized, the liabilities are extinguished or otherwise transferred to the federal government. And NNPC in its current form will cease to exist. So the law has said that we should incorporate NNPC Limited within 6 months of the law coming into effect. So we're already counting now as we speak. But it does not give a time frame for when NNPC in its current form must cease to exist, which is some of the concerns that some of us have. Now, the ownership of NNPC Limited, the new entity to be created, will be held by the Ministry of Finance and Ministry of Petroleum Incorporated. So some of you may have heard that the governors are uncomfortable. They're wondering, why is it that something that belongs to all of us, the Federation, is being held only by the federal government? Why are we not using a vehicle like the NSIA to hold investment, or maybe ask the Governors Forum to go and register Governors Forum Incorporated? So that debate is ongoing, but I don't know whether it's too late because now we have a law. So based on that law, Ministry of Finance and Ministry of Petroleum Incorporated would hold the shares of NNPC Limited on behalf of the Federation. As a safeguard, the law requires that before you can transfer any shares of NNPC Limited or otherwise sell the shares, you must get the endorsement of the National Economic Council. So you would know that the National Economic Council is made up of all the governors, and then the VP is a share of that council. So that in a way should serve as a safeguard. But I think for me, this goes beyond about, it goes beyond who owns the shares. It's a question of lack of trust. So government don't even trust themselves. Governors don't trust other governors. Governors don't trust the center, and nobody seems to trust any other person in Nigeria. Otherwise, I would have thought that the focus should be on the governance around the shareholding, the decisions that you need to make about who is going to be on the board, how competent they will be, and then how do you deliver on the mandates that you have for the new NNPC? And then how do you ensure that the benefits of that organization accrue to Nigerians? It's a shame for me as a Nigerian that for 44 years, NNPC declared no profit. In fact, the profit they just declared now, if you look at the financial statement, we have more questions than answers, because it was mostly about reversal of impairment that resulted in that profit. It wasn't any transformational thing that they had done. I always say that Saudi Aramco is the world's most profitable organization as we speak today. For the second quarter of the year, ended June, they declared a profit of about $25.6 billion. Profit alone. This is after they've paid taxes and royalty. So Saudi Aramco, controls about 9.5 million barrels per day. So let's say that's 5 times what we produce in Nigeria. So NNPC should be declaring somewhere around $5 billion for Nigeria, but here we are. So hopefully the NNPC Limited, we're hoping will come out of this PIA, would change the narrative for Nigeria. NNPC Limited will no longer be all in all. It will only just earn management fee for what it does for the country, which will be 10% of the proceeds from sale of profit oil and profit gas as management fee. It will be required to set aside 30% of the profit oil and the profit gas and remit it to Frontier Exploration Fund for us to find more oil. This is one area where Nigerians have conveniently interpreted it depending on who is making the narratives. Some people think that frontier exploration is only in the north, and therefore this is money for the boys, so they can share it. Some people also compare the 30% with 3% for the host community and say, why do you give host community 3% and you're giving the north 30%? All of those are just people creating unnecessary confusion. So 30% of profit oil and profit gas is not the 30% of all the profit government makes from that sector. So profit oil and profit gas tends to just only occur in production sharing contract arrangements where government will share profits. So it is this that we're talking about. That's about maybe 25% of the revenue coming from the sector would be accounted for via profit, actually through PSC, not just profit oil and profit gas. Our rough estimation is that this comes to about $100 million a year. It's still a lot of money and it shouldn't be wasted. So we want to find more oil, even though the rest of the world are not so keen about finding fossil fuel. But for us, we think it's still important. We currently have around 37 billion barrels of proven reserve of crude oil. And we need to get it out of the ground as quickly as possible, because that's when the value will be meaningful to Nigerians. For almost 40 years, our production has been hovering around 2 million barrels per day. We need to start doing more than that. Imagine if we're producing 4 million barrels per day as of today, the value of Naira will not be 560, the black market, it will not be 410 in the official market. In addition to that, there's a 10% of rent on PPLs and PMLs. Those are just the licenses and leases within the industry. So the operators pay rent every year. So 10% of that would also go to the Frontier Exploration Fund. Some of us, PwC, for example, we have said that it would also be great for governments to think about a future energy fund. As you're trying to look for fossil fuel, also think about how do you transform and transit to cleaner energy, such as making Nigeria the hub for hydrogen energy, wind, solar, and all of that. So the second one is the administration. This chapter of the PIA essentially focuses on licenses, it focuses on administration, regulation, penalties, and compliance matters. And it says that you can no longer operate different streams. Remember, we have upstream, midstream, and downstream. You cannot put more than one stream in one legal entity. So for those of them who have a single entity doing upstream and downstream and what is now midstream, they have to then split those entities into different components. Now, in doing that, government says we would allow you not to pay capital gains tax and stamp duties because we're really the one forcing you to break up your legal entity. So under the PIA, if you already have an existing contract or license or lease, you are not being forced to adopt the PIA. You have a choice to say, you know what, I want to continue to run my business under the old regime. If that is the case, all the fiscal provisions of the PIA will not apply to you. But of course, if you want to convert, you have 18 months to make that decision for you to convert into the PIA. Should you have the option to convert and decide not to, you will run the life of the license until such a time that this is up for renewal. And at that point, you have no choice but to come under the PIA. The principle behind this is that many of the investors did their analysis and projections based on what they knew as at the time they made their investments. It may not be fair to them for you to then change the rules midway into their game. So, and I think that's a good thing to do. So, which means it's optional for them to opt into the PIA. The commission that will regulate the upstream sector is required to develop a model license that would ensure that NNPC Limited has the right to participate up to 60% in a contract. So because Nigeria just loves to own stuff, this for me, I think it's one area where we need to start educating ourselves and be thinking differently. So we want to own refineries. We've used NNPC to own 60, 55%, in all the major oil assets for more than 50 years. So NNPC was established about 44 years ago. But for almost 50 years, we've been owning stuff in this sector and really nothing to show for it. America produces more than 10 million barrels per day. They do not own, the government does not own anything. But of course, because you're a government, you actually own everything. You can decide how much you want in royalties, how much you want in profit taxes, how much you want in rental, and all of that. So I can then take even 90% of the value in the system without investing $1. I'll let the private sector invest, I'll let them run it efficiently, and then I'll collect my taxes. This is the model I would have loved to see in the PIA. Unfortunately, it hasn't happened. This chapter also says that for the existing joint venture is when government will own a certain percentage of the oil assets. The oil companies will own the remaining percentage. The oil company will usually be the operator, and then you do a cash cost. So you make an estimate at the beginning of the year, how much are we going to spend? Let's say $100 million. Government has 60%, you say, government, please bring your $60 million. The oil companies have 40%, they'll bring their $40 million. What has been happening is government will not bring their money on time. And then when you now need to spend and government is not there, you go and borrow, government will say, well, you didn't get my approval before you borrowed. I hereby disallow the interest. So it was unnecessary for the sector. It was making business complicated. And so that was what led to the arrangement we have in form of production sharing contract that says, let the oil companies spend all the money they can spend. And then when they do find oil, let them recover their costs, and then we can share whatever is left of it. So host community, so this is the very controversial one. So the law requires that we find a way to take care of the host community. The operators, and the person who have licenses to operate in the oil sector upstream will be the settlor, setting up a trust fund. Now, they must contribute 3% of their actual operating expenditure in the prior year into that fund. That fund will have a board of trustees, and then you should have a management committee. Members of the trustees and management committee don't necessarily have to come from the host community, because we need people with certain skills and knowledge, but then the host community will have a representative. The amount contributed into that fund, 75% of it can only be used for capital projects, 20% for future investment by way of reserve. So this is where fund managers will have a role to play. And then 5% maximum for admin expenses. So this is actually very good on paper, because it means let's focus on development. So 95% is dedicated to capital projects and investment for the host community, and only 5% for admin expenses. If the settlor, which is the operating company, can then define who their host community is. So apart from your immediate community where you're carrying out your operations, if you have your assets in other communities, right, you can then define those other communities to also be your host communities, so all of them would benefit. So that addresses what we call the impacted communities. All of them would benefit. So if there's a damage to any asset of an oil company within a community, we'll repay it and take the money from the host community fund. So the idea is, community people, please don't damage our assets and don't allow other people to damage our assets. So you are now an interest owner in our investments, in our operations. So let's make it work for the interest of everyone. It is estimated that this 3% host community contribution will translate to about $500 million a year, because the OPEX in that sector is roughly around $16 billion. And this amount can grow if we have more investment, so the base would expand. So this is a lot better than a percentage of profit, which is not guaranteed. So the narrative is not just 3 and 30%, it's about 3% of a much larger base that is guaranteed to happen every year, versus 30% of an amount that is smaller and may not even happen every single year. So the fiscal framework, very interesting stuff around the tax regime. Some of it is that we now have what we call hydrocarbon tax, and then every company in that sector will pay company's income tax, which they didn't need to pay before for upstream activities. And so this fiscal framework is trying to make sure that government earns more. At the same time, we still want to ensure that we have fair returns for investors to be able to invest. Venezuela has the largest proven crude oil reserve in the world, over 300 billion barrels. Yet they can't find investors because the environment is hostile and everything is unstable. So the fact that Nigeria has the largest crude oil reserve in Africa, it's not a guarantee that people will come and invest. After all, the OPTS, the private sector organization for the sector under the LCCI, estimated that between 2015 and 2019, about $70 billion was invested in the petroleum sector in Africa, and Nigeria attracted only 4%. So that's to tell you that we're almost becoming the Venezuela of Africa. So we have to make sure that we're competitive and we provide the right investment climate to investors. It's not sufficient to brag about high returns. People look at that within the context of risk, especially a country like Nigeria, where country-specific risks are quite high. So the rates of hydrocarbon tax ranges from 15% to 30%, 15%, for example, on shallow water and onshore. And then for deep offshore, you don't pay hydrocarbon tax, you pay only CIT of 30%. Education tax is still applicable, but no longer tax deductible. Before, you could pay the education tax and also deduct it as an expense for your PPT purposes. If you fail to file your returns on time, 10 million naira default penalty from day one. And then for every other day, you pay 2 million. So these are huge amounts of money. If you commit any offense for which there's no penalty that is prescribed, you pay 20 million naira. So there's something in tax that we call RED, wholly reasonable, exclusive, and necessarily incurred expenses. This is the principal rule for expenses to be tax deductible. For the oil and gas sector, we didn't used to have R there. That is, we didn't ask questions about whether expenses were reasonable. Now it has been introduced under the PIA. In other words, if a CEO of an oil company goes to Port Harcourt from Lagos and they charter a flight, the taxman can say, well, actually, this expense was wholly incurred for the business. It was exclusive. It was necessary for you to go to Port Harcourt, but it's not reasonable. Why did you have to hire a plane when you could just have taken a business class seat on a commercial plane, and therefore disallowed the remaining amount? For the hydrocarbon tax, the maximum amount of expense you can claim is 65% of the gross revenue. Now, this is imposing indirectly a minimum tax. What that means is whatever it may be, you have to pay tax on 35% of your revenue for hydrocarbon tax. Certain expenses are not deductible except you meet certain conditions. Royalty rates have been simplified and reduced. And then we have now introduced, apart from royalty based on production, there's now also royalty based on price. When the price of crude oil per barrel exceeds $50, in addition to the royalty for production, you pay a certain percentage as royalty based on price. And these amounts of royalty based on price is like a windfall. It will go to the Nigerian Sovereign Investment Authority for them to invest it for the future of Nigeria. Very brilliant idea, except that there's a constitutional issue with that, that the Constitution does not recognize that any amount that should go to the Federation account can be diverted to any other source. So in our conversation with the policymakers, we're already saying to them, this is a good idea, but find a way to go and write it in the Constitution so we don't have a crisis a couple of years or a few years down the line. For gas infrastructure investments, you can get additional tax holiday of 5 years. There's already an existing 5 years, which makes it 10 years. We want to get to a point where you can turn on a switch at home and your gas will come up without having to carry cylinders everywhere. So this kind of investments are the things that the PIA is seeking to encourage. The last chapter is miscellaneous provision. So this is the chapter that talks about savings and grandfathering. So we are repealing so many laws, but we're saying actually because we want to preserve certain contracts under the old regime, these laws would also be preserved until such a time when those contracts no longer exist. So essentially that's what this has to do with. And then you see the schedule, there are 8 schedules to the PIA as listed on the screen. So I'll move on quickly and share with you our stakeholders' perspective, and then we'll try and wrap up. So we conducted a study. This session we had was for business leaders and it was by invitation only. So it wasn't available to the general public. And And so we, the people who attended were business owners, CEOs, CFOs, executive directors, and so on and so forth, cut across different sectors, but not surprising that about 41% of participants were from the oil and gas sector. So we asked them a number of questions, one of which is, what are the top 3 changes in the PIA you are most excited about? And the top 3 came out as, number 1, having a commercial and profit-focused NNPC. Number 2 is the full deregulation of the downstream sector and removal of subsidy. Number 3 is the creation of regulatory commission and authority. So the common denominator to what excites business leaders about the PIA is the reform of the sector. So we have been saying to government now to say, if you mess up this reform, all the excitement will disappear and nobody would invest. You'll be there telling yourself one story of we're trying to attract more investment, but investors are looking at all of these details in making their own decisions. We then asked a contrasting question that says, what are the top 3 changes you most disagree with? Number 1 is, why we are looking 30% to frontier exploration. Number 2 is, why are we giving only 3% of operating expenses to host community? And then the ownership of NNPC, why is it by the federal government alone? So the concerns of business leaders, good news is they are not major concerns. They tend to align with the general views of the rest of the public. We asked people how they think, how much impact they think the PIA will have on their business. At the extreme left of the screen is no impact, right? Is great impact. And 50%, half of our respondents fall in the middle. And then you see to the extreme right, these 12.7% are the people that will fold up or sell their business if PIA doesn't work. What they're saying to us simply is that our business depends on the PIA. If it doesn't work, you're going to see these guys in the newspaper selling off their assets. Given that no law is perfect, so the PIA is not an exception, we then ask, would you support this PIA overall, everything considered? And it was overwhelmingly a 96.4% support in favor of the PIA and only 3.6% are against it. So if this were to be the National Assembly, we say the ayes have it. We had a session with commissioners for finance from the 36 states. So, but we did the survey after the presentation. Different from the business leaders, we did the survey before the presentation. For the commissioners, we did it at the end, and the verdict was 100% in support. Even though when we started the session, they were all up in arms, very angry about so many provisions of the law. Apparently, many of those angers were based on either misinformation or incomplete knowledge. So the last section of this presentation is around the implementation imperatives and the next steps. So we think we need to rise from our current state of confusion, complication, secrecy, and things not being organized into a point where we become fit for today and for tomorrow. And we need to have conversation around energy transition, around market-driven pricing, around promoting investment, around considering the value chain from end to end, and addressing impediments within the sector across all the major areas. So I will not read this. You have a copy of the deck afterwards. So at the end of the day, all of these conversations will be centered around the value drivers of the PIA, right? So Nigeria is estimated to have lost about $50 billion just over the past 10 years alone in investments. And as of today, we know that FDI continues to decline. So this sector has been a major attraction for FDI, but it's been in comatose. So hopefully now, unfortunately, COVID has complicated everything again, but we're hoping that if we start well with the implementation, we begin to attract investment. Not only are these investments important for that sector, they're important for Nigeria. Naira will not be where it is today if we had more FDIs coming into Nigeria. So one key quick win is to provide certainty for investments. Number two is the robust governance structure that we hope to get. And then transparency around licensing, administration, regimes of this and that. And then having an NNPC that runs like a private sector organization. And then providing linkages within the value chain for the sector so that Nigerians can have prosperity. And we can also take care of the host community where we operate. And then overall ensure that government has higher government take by way of larger base rather than continue to take more bites from the same pie. This is about, can you grow the pie so that even if you take a smaller bite, it's mouthful. So we can have also decent returns for investors. So the implementation committee, we have met with the implementation working group set up by the federal government, and we've shared our insights with them in terms of what they should be focusing on. If you look at their terms of reference and you break it down into work streams, you see things around legal compliance. Is it consistent with the Constitution? Do we need to go and amend something else? How do you ensure that you have coordinated execution? It was disappointing for me when I saw in the news a couple of weeks ago that the Ministry of Trade and Investment, Industry and Investment, said they were setting up their own implementation. I say, what's the business of Ministry of Trade and Investment to be the one implementing the PIA? Apparently, some guys are concerned that their roles are going to disappear around something around measures and measurements. I say, see, we have started again. Before you know it now, 10 ministries are implementing the PIA. So hopefully we think that they will move on that very quickly and put things under control. So communication and stakeholder engagement is important because you cannot ignore people. So their feelings, their aspirations, their concerns are valid. Some of it you need to explain. Some of it don't say, don't dismiss anything. Otherwise, you're failing even before you have started. If you don't explain this 3% host community contribution, for example, and the host community people then say, actually, okay, so they've given other people 30% and they've given us only 3%. So nobody will do oil activities here, and they start hostility again. We'll be in trouble, bigger trouble than we are in already. So just those engagements and how we communicate and how we drive the public narrative is important. We also said to the implementation committee, make sure that you get the press to even understand these issues, because they write their stories and move on to the next one, and they like whatever is sensational. Sometimes that in itself creates a lot of problems. So the outcomes we expect from this implementation committee include institutional design, personnel transition, and upskilling. So the law requires that all the employees of NNPC and the other agencies like DPR would move into the new entities. So on one hand, this is good to address political issues around labor, but then on the other hand, it's a potential, landmine, because people will then move with the old mindset, even though you have new entities, you have a new bottle, but the old wine is inside. It's the same thing. So a lot has to be done in terms of changing mindsets, upskilling, and making sure that people have the right governance framework. So immediate priorities, I've spoken to some of these already, and also like developing manuals and operating procedures, and then ensuring that you have a control framework around this. So at the end of the day, the success depends on institutions and people. So the pitfall that we see that we need to avoid include lack of a robust and coordinated implementation plan, not involving stakeholders enough, and not being mindful of sensitivities, lack of capacity of the institutions, and excessive political interference. There was a time that over a period of 5 years, NNPC had like 6 GMDs. I say, even if you're a genius as a GMD, you have not even settled down before they removed you, you can't get anything done. And then we should not delay issuing regulations under the PIA. A lot of regulations and guidelines are meant to be issued. If you don't issue them on time, what you do, you also create another form of uncertainties, because the PIA is not like very detailed on everything. So a lot of it, you still have to try and figure out how to implement. And in trying to do that, you can't just sit down somewhere as government and think that you have all the knowledge and issue regulations and guidelines like the headmaster. You have to engage with the investing community, with professionals, with host community, with other key stakeholders, including the international community, to make sure that whatever you come up with is what is best for the country. We have seen and heard almost like a class action, led by the likes of the World Bank to say, we are not funding fossil fuel anymore, but I think they're making an exception for developing countries like Africa, because the whole world is moving away from fossil fuel. You must have heard about Shell. Shell says we continue our investments in fossil fuel, but whatever we make from there, we are now diverting it into cleaner energy investments. So they are not making new investments anymore. Total used to be Total Oil and Gas. Total has changed their name to Total Energy because they are playing down on oil and gas, and then they want to focus more on clean energy. So these issues around, the future of energy and energy transition is extremely important. So there's a role for everyone, for financial services, for insurance, for asset managers, for fund managers. So this thing is not limited to oil and gas alone. So we need to brace up for the opportunities, and also as professionals build our own capacity to be able to help. Of course, there's nothing wrong in making money while you do so. So thank you very much for paying attention to me. We have an app. It's called Tax 247. You can get these from the Play Store or from the iOS store, and then you get over 60 business laws, including the PIA. It's already there, and it's easy to use. You can search, you can bookmark, so highly recommended. Thank you for paying attention to me.
Thank you very much, Taiwo. That was such an insightful presentation. So, Ibukun, do you want to go ahead before we take the Q&A?
No, I was just saying thank you to Taiwo. Thank you very much, Taiwo. Before we go to the questions, it was really insightful for me, and I'm sure a lot of my colleagues as well, in terms of the knowledge, and I was writing throughout, if anybody observed through the video. But before we do the handover to Elizabeth to take the session, I want us to play the society video again, just for the knowledge of those just joining the call that ask who we are as a society and what we're about. So Frank, could you play the video? Thank you.
The decision to aim for a long-term and successful finance career, taking the Chartered Financial Analyst CFA exam and studying the curriculum is an excellent way to ensure you have a strong knowledge base and top-notch skills. Are you ready to take the bold step to invest in yourself? CFA Society Nigeria is at your disposal, promoting the highest standards of investment practice in Nigeria. As an affiliate of CFA Institute, CFA Society Nigeria seeks to promote the highest standards of investment practice in Nigeria and to provide a vibrant community in which its members and other key players in the investment industry can interact and grow. When you have the CFA Charter, you're globally recognized. Take advantage today by writing the CFA exam and joining us at CFA Society Nigeria. For more information, visit us at cfasocietyng.org. CFA Society Nigeria, making finance a force for good.
Thank you, everyone. Yeah, thank you. So we'll be taking the Q&A session now. I'll encourage everyone to kind of put their questions in the chat box, or if you want to speak, then you can raise your hand to, I can unmute you to ask your question. But while we're waiting for everyone to, get their thoughts wrapped together for their question, I have one or two questions. I have a question personally, and there's another question from the YouTube live, which are kind of similar. So I think my question would be, for the host community fund, is it going to be operated as a collective, a general fund, or each entity or each operator is going to have its own host community fund where it's going to be sending its 3% to?
Yeah, great question. Unfortunately, it has to be operated separately. So some of us feel like that in itself is a problem, because some of the operators are so small that their 3% is small, and then the 5% of the 3% for operating expenses can't just cover anything. But the answer is it has to be done separately. Everybody, every operator has to set up their own funds.
Okay, thank you. That's enough fun for plenty fund managers
Yes.
that we have in the industry to manage.
Yes, indeed.
Okay, thank you. So I think the similar question is, was the knowledge, qualification, and experience of the representatives of the host community properly defined? That's a question from one of our.
Yeah, it's very difficult to define details like that in the law. The law just says they must have the right experience and competence and skills, right? So that's all that the law can say. Maybe in the regulations, you can then go a little bit further. If you are investing 20%, you want people with investment banking or investment management experience. You want lawyers, for example, because a lot of issues will be around legal stuff and so on and so forth. I think that at the end of the day, you know, how we implement this, because we've seen a lot of resources going into the host community and Niger Delta with nothing to show for it, and then NDDC being the most embarrassing and shameful one. We hope that this will not go in the same path. But then, yeah. So at the moment, we don't have very detailed prescription as to what will qualify you to be a member. The law only just says broadly, you must have the right experience.
Thank you very much. We also have another question from Anuli. Please, can you shed light on the reasoning behind the frontier investment, especially in the North?
Yeah, so the frontier investment is, we have some frontier basins or acreages. So these are areas, they're mostly inland. So they're within, you know, the land surface areas, which means trying to get the oil out is a little bit more expensive. You're not sure you find commercial find or reserve. There was a time that government said, for me to give you a block, right, in the inland basin, where you're almost guaranteed of finding oil, you must take another one in the frontier basin so you can explore the two of them. Even the oil companies have to relinquish those rights. They said they were not interested. So government now has taken the view that we have to make that investment ourselves as a country. And that's why they're setting the money aside. So these frontier basins cut across Nigeria. So it's not the North alone. There's Anambra Basin, for example. So government wants to invest the money in those frontier basins to see whether we find more oil. The more oil we find, the more we can produce. Because even OPEC has a quota or ratio of your reserve to your production. So in Nigeria has 37 billion barrels, and they're supposed to produce somewhere around 1.8 million barrels. If we had 70 billion barrels, we would have been producing close to 4 million barrels per day now and have less pressure on the Naira, especially vis-a-vis exchange rate to the USD.
Thank you very much. We have a few people with their hands up, so I will call on Abosede to please, if we can unmute him or her, I'm not sure, to ask their question.
Thank you very much. Thank you, Taiwo, for the insightful session, and thank you, CFA, for this opportunity. My question is around the host community fund. I just want to know, with the introduction of the host community fund, what now happens to the memorandum of understanding that has been signed with the host communities? Does that continue to be in existence? That is the first question. And is this an additional fund to be made together with the NDDC, which is already in operation? Is this to be made in addition to the NDDC fund, or does this host community fund eradicate the NDDC fund, that NDDC levy, which is 3% of the annual budget? I just want to know how this will play out.
Yes, great question. So on the first one, the MOUs that the operators have with the host community is just a way of buying peace. Many of them also pay warlords to protect their assets. And in fact, there are people who said, well, maybe there are people who just blow up the assets, because that's what, by repairing, you also make money. You have to award contracts to repair. So all those MOUs are, I would say, gentlemen agreements, or maybe say gentlewomen as well. So we don't sound like it's only men who have agreements. but they're not supported by any law. So anybody is free to continue with those arrangements. They're not legalized or otherwise illegal, so they're just there. So under the host community fund arrangement, it is mandatory, you have to do that. Now, to the second part of your question, yes, this is in addition to whatever we have currently, in addition to NDDC will continue. I have been advocating already that if this host community fund structure works, let's just collapse NDDC into the host community, because I have no faith in NDDC anymore. So they've abandoned over 13,000 projects in about 19 years. I think it was 19 years. When I did the calculation, these guys start and abandon 2 projects every day. Who does that? It's not natural. The only reason why we abandon so many projects like that is they were not awarded in the first place to be completed. They were awarded just to give people some money so you can move on to the next award. So it's in addition to those, including local content development levy is also there. So 1%, which is meant to also even help develop the human capital. We focus on roads and schools, which are also important, but most time we don't even ask questions about why is it that almost 50 years after, we can't even boast of many Nigerians that can run that sector without the involvement of expatriates. So we should also start thinking about human capital development for skills in that sector.
Thank you very much. So I will just take a question. There seems to be a lot of questions around the host community area. Question is, what is the definition of a host community from Yemi? And does it include communities, pipelines passing through, communities where pipeline pass through?
Yeah, great question. Yeah, so host community is defined, but then there's a lot of, I'll say, laxity for the operator to define who their host community would be. So for example, if your operation is in a particular location, that has to be your host community. But in addition to that, you may have your immediate operation in a particular community A, but your asset is in community B and community C, or passes through those other communities. So while community A may be happy, if community B doesn't like what you're doing, they'll blow up your pipeline. There's nothing you do about it. So the law says that the operator can, by definition, include other communities as their host community. Brilliant concept. And it says with respect to people who operate in the deep offshore. So imagine somebody is somewhere 150 nautical miles, just in the high seas. Who is their host community? So in principle, they have no host community, but the law wants them to also contribute. So the law says if you find yourself in a situation like that, your host community will be the littoral states. So we just find one state that is closest to you and say that's your host community. Whatever money you bring, we need development. Let's just find a way of developing that sector and that region rather. So, and it makes sense to me.
Thank you very much. Before I call someone to speak, I'll also just take another question from the chat. Someone is asking, with the creation of NNPC Limited, would the current NNPC cease to exist? And a similar question is, who will be responsible for appointing that the MD of that NNPC Limited? Will he be the president of the federal government of Nigeria?
Yes, we are stuck with the president. So let me start with the second one. So, they will tell you on the recommendation of XYZ, but we know that those recommendations are just on paper. So it's the president that will still do it. I was talking to the commissioners of finance. They were having a policy session yesterday in Abuja. So they invited me and I said to them, see, we can make all this political noise, but you know what really matters? Go and advise your governors. Let them ask for a seat at the decision table. The fact that the president will just wake up one day and appoint anyone they like as DMD, after 6 months, they remove and put another person there, it's not helping Nigeria. So let's have a proper governance structure for who we appoint. When I was speaking to the implementation committee, I said, you know what, they were asking me a question about, do I think that overall this PIA will attract investment? I said, even me, I don't know the answer, but I can tell you the answer as soon as we set up the structures. Once we set up the structures and I know who you have appointed, I can predict with 100% precision where the outcome will come out. Because it's at the end of the day, it's about human beings who are competent to lead and have the character to do the right thing for Nigeria. You have those guys, whatever the hurdles and the impediment may be, they will surmount it. But you have the wrong person, you can have the best law, it will not be worth the paper on which it has been written. So this is really the way I see it. I'm hoping, I'm praying. So I know prayer is not a strategy, but Nigeria is at a point where you have to also pray. All right.
Thank you very much. Similar question to the NNPC question. Since NNPC Limited will be wholly owned by the federal government, can you please explain the difference with the previous NNPC? Also, do you think NNPC Limited can actually make profits in the long run? I think that was a question on my mind as well. If it's going to be wholly owned, is it not going to be subject to the same bureaucracy and issues of government-owned enterprises? Again, people say government have no business in business.
Yes, yes. Yeah, they say government has no business in business, but we know Saudi Aramco is the world's most profitable company. So it's not really that government is terrible. It's their approach sometimes that is the problem. NNPC Limited can make profit. And based on the PIA, it should make plenty of profit, right? So which means on paper, it's been designed to make a lot of money. Whether it will now make money is a different thing. And again, I'll come back to what I said before. It depends on the leadership and the structure you set in place. NLNG, right? By my estimation, is less than 5% of the size of NNPC. NLNG has given Nigeria over $30 billion in the period that they have operated. NNPC just declared first profits in 44 years. That profit service is shaking, is reversal of impairment. So you can see already, right? If only we had run NNPC like we are running NLNG, we should be talking about in those 44 years, at least $300 billion that we should have made from profits from NNPC. Here we are, we're making losses. So look at subsidy alone, right? They say it's not subsidy, it's under recovery, but that's nomenclature and semantics. We've lost over 1 trillion naira already in 6 months alone. We are housed within NNPC. Consumption when the price of PMS was almost same as market value, which means if you went, to neighboring country at the time, the price was almost the same. Nobody was smuggling. Consumption was around 30 million liters a day. Fast forward, now that there's subsidy, consumption is over 100 million liters a day. Where did we find the human beings and the vehicles that suddenly are consuming 3 times our consumption size? So if we address those issues and just make NNPC, if you ask me today, the solution that is guaranteed to work is just sell NNPC. Sell all the interest that we have in oil assets, just sell everything to the private sector. When Obasanjo was trying to sell refineries, they said, he was selling to cronies and friends. I'm not going to rule that out. But I said, if there's anyone who can take refineries from Nigeria, all the 4, for free, I would ask them only one question. Are you competent to run it efficiently? If you can, let's give it to them for free. We refuse to sell it, right? Fast forward, we're spending over 100 billion annually. We are not refining a single barrel of crude oil. The private sector would never have done that. So we just create different avenues for Nigeria to continue to bleed, even though it's a poor country. So I think that NNPC can make profits, NNPC Limited can make more profit, but it all depends on the governance and the leadership.
Thank you very much, Taiwo. We are already out of time, but I'll just crave your indulgence to take one last question. And I apologize to the audience that we are unable to take all their questions. There are just so many questions in the chat room. And so there's this similar question which about 3 or 4 people have asked in terms of fossil fuel and clean energy, and how does this is me paraphrasing the question so that I can merge them together. How does the PIA encourage that, especially seeing that the world is moving away from fossil fuel and is more focused on clean energy? And I think a simpler question, which I'll just add to that, is with the CIT, will companies be no longer required to pay the petroleum tax? And yes.
Okay, so let me start with the second one. So companies will still pay, tax is just what you pay on your profit. So if you're in the petroleum sector, you're paying petroleum profit tax. That may not be the name that we call it. We now call it hydrocarbon tax and companies income tax. So to answer that question, it means that once you switch over to the PIA regime, even the law says, even if you want the PIA regime, it's only after 18 months that you can start filing returns under the PIA regime. So once you switch over to the PIA regime, you will stop paying PPT. You will then pay hydrocarbon tax and CIT. So the first question around, fossil fuel energy transition, the PIA mentioned something about the NNPC Limited investing in renewables and all of that, but it's not sufficient in my view. I think we need something more structured that is not only even dependent on the NNPC. So I want, for us to have a fund where the management would actually be led by the private sector, or a similar structure as the NSIA, right? That looks at how can we turn Nigeria, particularly leveraging the African Continental Free Trade Area Agreement, how can we turn Nigeria to the hub for energy transition for Africa, given that people have billions of dollars all over the world, they're looking to invest in clean energy. Let them just bring the money here. Let's for once be the ones hosting the rest of the world to figure out how to make energy transition and clean energy affordable and also available to everyone. So that is the way I will respond to that.
Thank you very much, Taiwo. Thank you. You've done justice to all the questions. I wish we could take more questions, but time is really not on our side. So at this juncture, I'll call on the General Secretary of the CFA Society Nigeria, Musa Balogun, to please give the closing remarks and the vote of thanks. Thank you.
All right, Elizabeth, thank you so much, Musa Bagudu. When you have a topic like this that is very apt, and then you now mix it with a professor in the topic to come and discuss the topic, you are surely going to have issues with time. Even if you add another one, I will still be talking about PIA with Mr. Oyedele. Thank you so much for giving me the opportunity to say thank you to our professor. I express the appreciation of the board and members of the CFA Society Nigeria, headed by our president, Ibukum Oyedele, to our presenter of the day, Professor in PIA, Taiwo Oyedele of PwC. We thank you so much for giving us this opportunity. Very insightful, well prepared, and then well delivered. We're so grateful for your time. We hope you also hear us anytime we call you to join a panel to have this kind of discussion again. I also want to thank our partners, Fund Managers Association of Nigeria, Pension Fund Operators Association of Nigeria, and the SCCA for coming together in this activity. A special appreciation to our programming committee headed by Elizabeth. You have done a good work. Just know that we need to have more of this, so more is coming. For the people that did the legwork, I mean, the society office headed by Yemi Ajagon, we appreciate you all. Thank you for all you have done to see that all our programs are being implemented successfully. To all the participants of today, we say a big thank you. Please remember that it is part of our activities to generate programs that are very educative and enhancing. We lead the discussion in the investment industry. So you can actually suggest topics to us. You can tell us what we want and we'll deliver it to you. We say thank you. Visit our social media handles to get updated with our activities. You can follow us and then we give you the updates as they come. Thank you so much, everybody. Hope to see you again soon.
Thank you.
We are professionals. We are impact-driven. We are CFA Society Nigeria, a member society of the CFA Institute Global Network of Societies. Our mission is to promote the highest standard of practice in the Nigerian financial services industry and provide a vibrant community for our members. The CFA Charter signals the holders' commitment to professional excellence. As thought leaders, we collaborate with stakeholders to ensure adherence to ethical standards, better education for professionals, and to build market integrity. We are the leading voice for advocacy in the finance and investment industry in Nigeria. To partner with us or become our member, visit us at cfasocietyng.org for more details. CFA Society Nigeria, make finance a force for good.
Awesome session.
Hi.